In 2023, cyber insurance is expected to become an essential part of doing business, as companies seek to protect themselves from the rising tide of cyber threats. This trend is being driven by the increasing frequency and severity of cyber attacks, as well as new data privacy regulations that hold companies accountable for data breaches. Insurance companies are also getting more sophisticated in their ability to assess and price cyber risk, using tools like artificial intelligence and machine learning. However, there are still challenges to be addressed, such as the lack of standardized language and metrics for cyber insurance, as well as the need for better collaboration between insurers and cybersecurity experts. Overall, the cyber insurance market is expected to continue growing rapidly in the coming years, as companies realize the importance of protecting themselves from the financial and reputational damage of cyber attacks. The cyber insurance industry is definitely evolving and changing in response to the increasing frequency and severity of cyber attacks. In the past, cyber insurance policies were relatively straightforward and focused mainly on covering the costs of responding to and recovering from a cyber attack, such as forensic investigations, data restoration, and public relations efforts. However, as cyber attacks have become more frequent and sophisticated, the cyber insurance industry has had to adapt and expand its offerings. Now, many cyber insurance policies also cover things like business interruption losses, cyber extortion payments, and even reputational harm caused by a cyber attack. Additionally, insurance companies are now placing a greater emphasis on risk management and prevention. For example, some insurance companies will offer discounts on premiums for companies that implement certain cybersecurity best practices, such as multi-factor authentication or regular employee training. Overall, the cyber insurance industry is evolving to keep up with the changing cybersecurity landscape and to provide more comprehensive coverage and risk management services to businesses. The cyber insurance industry is evolving towards more customized and tailored policies that can better address individual companies' needs and risk profiles. This trend is driven by the realization that one-size-fits-all policies are not sufficient to cover the complex and ever-evolving cybersecurity risks faced by different organizations. Insurers are now offering more specialized policies that can be tailored to the specific cybersecurity risks faced by a company, such as coverage for specific types of attacks or data breaches. Some policies also offer additional services such as proactive security assessments, incident response planning, and even post-breach remediation services. This shift towards customized policies reflects a growing understanding among insurers that companies have unique cybersecurity risk profiles, which require a more personalized approach to cyber insurance. By providing more tailored coverage and additional services, insurers hope to offer a more comprehensive and effective solution for managing cyber risks. The insurance companies are increasingly using data analytics and other technologies to assess cyber risks more accurately. They are using advanced analytics tools to analyze data from various sources, including cybersecurity incidents, threat intelligence, and network traffic patterns. This enables insurers to identify emerging cyber threats and assess their potential impact on businesses, and offer policies that are better suited to individual companies' risk profiles. Insurers are also using machine learning algorithms to analyze historical claims data and identify patterns and trends that could help them predict future losses. This allows them to price policies more accurately and offer better coverage to customers. In addition, some insurers are using artificial intelligence, AI, and natural language processing, NLP, technologies to analyze policy documents and contracts. That in turn helps them to identify potential coverage gaps and ensure that policies are properly customized and tailored to the needs of each client. Overall, the increasing use of data analytics and other advanced technologies is helping insurers to better understand and manage cyber risks, and offer policies that are more customized and tailored to individual businesses. This trend is likely to continue as the cyber insurance industry evolves to meet the changing needs of businesses in an increasingly digital and connected world. Cyber insurance premiums are expected to rise in the coming years due to the increasing frequency and severity of cyber attacks, which are resulting in higher costs for insurers. In addition to the direct costs of claims payouts, insurers are also facing higher costs for things like legal fees and incident response services. Insurers are also taking a closer look at the risk profiles of individual companies and adjusting their pricing accordingly. companies with weaker cybersecurity measures or a history of previous data breaches may face higher premiums or be denied coverage altogether. Another factor driving up the cost of cyber insurance is the increasing demand for coverage. As more and more companies recognize the importance of cyber insurance, there is a growing pool of potential customers competing for limited coverage options, which can drive up prices. Overall, while cyber insurance can provide important protection for companies against the financial costs of cyber attacks and data breaches, it is important for companies to also invest in strong cybersecurity measures to reduce their risk and potentially lower their insurance premiums. The importance of companies taking proactive measures to mitigate their cyber risks, as it can potentially reduce the likelihood of cyber attacks and data breaches. The increasing severity and frequency of cyber attacks mean that insurance companies are likely to raise premiums and deductibles for cyber insurance policies. Therefore, companies need to invest in robust security measures and educate their employees on cybersecurity best practices to reduce their risk profile. Moreover, companies that take proactive measures to mitigate cyber risks are more likely to be eligible for customized and tailored policies that are better suited to their individual risk profiles, which can potentially save them money on premiums. Overall, investing in cybersecurity measures and training employees on best practices is not only important for protecting company assets and data but also for reducing the costs associated with cyber insurance premiums. As the cyber insurance industry continues to grow, it is likely to experience significant changes in the coming years. New technologies such as artificial intelligence, machine learning, and blockchain are likely to play an increasingly important role in assessing and managing cyber risks, and insurers will need to keep pace with these developments in order to remain competitive. Additionally, as the threat landscape continues to evolve, insurers may need to introduce new policy provisions or adjust pricing in order to cover emerging risks. Overall, the evolution of the cyber insurance industry is likely to be driven by a combination of factors, including the increasing frequency and severity of cyber attacks. Also, the development of new technologies for assessing and managing cyber risks, and changing regulatory requirements. In this rapidly changing landscape, companies that take proactive steps to mitigate their cyber risks and stay up to date with the latest developments in the industry, will be best positioned to protect themselves and their customers from the potentially devastating consequences of a cyber attack.